that's something else I want to factor in too, right? How much can I possibly still reverse back on the quarter itself? Because that is going to be something that's really crucial. And I mean, if we were to delete everything that's in here right now that we just put on here, you can see that this thing is getting pretty freaking close to that 25% ratio, right? So if we were to go back and retrace back even just last quarter, do you guys see where we're sitting and situated? I'm not making this up. Look, you're sitting right at that spot, almost to the penny, 438125. Okay, so when I'm staring at this, I'm like, okay, even these midpoints technically should start aligning to the 4,500 mark, right? And I would assume that if we start snapping that, we would be around 4583, 4560. So I'm looking at this in many variables. Also, the monthly is going to be a huge spot too, because again, you're closing out the month, right? How much could you possibly retrace or engulf on the full month? So last month's high was 4578.50. Close was 4360. Opening range was 4488. Lows that hit there was 4094. So again, it's kind of taking it back to 4,500. The monthly open was just under 4,500. Everything kind of aligns in terms of some retracements here. I wanted to actually see what some of the volatility ranges had looked like. So we'll take a look at that. We'll see exactly what's setting up in here. We do have Fed speakers tomorrow afternoon, so something else to kind of factor in. So that's a really in-depth price analysis, but I'm trying to give you guys a much bigger picture in terms of maybe a longer trend, all depending on obviously what's. So I want to see, where is it here? I actually want to see what the realized volatility is. And we were looking at a range of 0.5 to 10. Okay, so do you see how it's starting to come back there? This is over a 21-day period. Do you guys see that? So realized volatility is coming back. We haven't actually hit any of these ratios in the last few sessions though. So let's put this back to kind of like the line charts more, but sometimes when you see it in a candlestick, you can see that a little bit more clearly. Do you see this here? What have we had happen? I'm actually trying to, this is something I'm still back testing, so it's kind of fun because you guys will experience it with me. I'm really curious to see the ratios and the metrics in terms of volatility based on how many following candles you can get when you haven't hit volatility recently. So I'm seeing that 3 days in a row, right? The last time this happened was 1, 2, 3, and then on the 4th day, then we hit some volatility again. So in terms of consecutive days up, back in here, it was a low volume trend, right? If you guys remember back in the fall before hitting some volatility again. So has volume been high or low recently on the indices? Yeah, it's been relatively low in comparison to the actual price action that's been happening, right? Like, so this is definitely a lot lower than what we've seen happen back in January and February, right? So back then we had, where is it? Back in here, we had a really continued climb and everyone was complaining that there isn't even any volume, but why is the market climbing without volume? The market can definitely climb without volume because there's no pressure pushing it down. So this could be something that we could see happen here. So I really want to see, and I'm watching to see if it can hold this -5 ratio. Do you guys see this here? Kind of like right on this wall in terms of this kind of realized volatility, kind of like right back in here. And I've been playing around with this a little bit. You can kind of see how you hit some walls in here, right in here, right in here. And I'm starting to see some lower highs hit in here. This also kind of looks like a head and shoulders. Do you guys kind of see this? I know it's not like the cleanest, but like,
yes,
I am
definitely
seeing that. So like, if we fail that there and we keep going down, so technically that realized volatility there could do what? Like this is, what happened the last time this happened when we had a bit of a steep dive here? Like pay attention to where it's sitting right now and situated right in here, right? Pretty similar ratios down, which when it was going down, this means it's going up, right? So they're inverse to another. And the last time this happened, pay attention to where it stalled. So like, look at this in terms of like the actual chart. So last time this was hitting right about here, right? This right here, that was up here. We're already at the downside. Right now, we're about more than 50% of the way there. Do you see this? Like in terms of where this is situated? We're already halfway there, but we still have halfway down.
And Izzy, it looks like the one that happened in January happened just around and after OPEX as well.
Yeah, these are mostly trading around those OPEX events, which is kind of the cool part. When I'm still back testing this a bit, so I'm just kind of seeing some correlation. So this is kind of what I would see if we were to see this happen, right? Maybe we get something like this, which would mean we could get something like this. Do you see what I'm saying? Because last time we were testing this range in here, right? If you take it straight down and where we're situated right now, but we've only moved about halfway from that ratio from where we currently are, right? Because we're only about right around here. So there's about between the high to the low in volatility, there's about a 25% buffer. Do you guys see that? So it gives a little bit of room there for some potential squeeze. Obviously we could, and this is, I'm not talking about just tomorrow, I'm talking about probably the following week in general, that because we could still have that inside day, like I said, tomorrow, but then end up having a gap up open Monday or something like that, right? Because think about it. This goes back to that correlation. In September, we had a gap down Monday post quad witching and then engulfed or pierced, sorry. This time we've engulfed before quad witching, right? Which technically would be a gap up Monday versus a gap down, right? Like that's kind of how my brain is processing this information. So from a volatility metric, yeah, I don't think I don't think it has quite hit that ratio yet. And it looks like so far it's starting to decrease. I actually really do like, TrendSpider does have this one indicator. I think it's this one right here. See if I can put it on the daily. Do you see that?
Yeah.
Yeah, I really like this because it kind of usually aligns with my dates and patterns, but it also kind of helps me visually see that relative volatility, right? And if we can snap that, that's going to, do you see how it aligns really well with that chart there from Tradewell? Because if we come back over these ranges, what happened the last time we broke that? Well, you got this nice uptrend, right? You got this really nice uptrend. Look at the last time it happened back here. This was that low volume move. Do you guys see this here? Look at that uptrend. So these are just some volatility indicators that I'm going to be using just to kind of help me measure that, because this was a clear uptrend break. And again, when you go back to Robson's platform here, look, there's that decline. And even though volatility was relatively flat and volume was low, you were still moving up, right? Could we see something like that happen again? I don't think it's unlikely. Like it is one of the probabilities. So this is something I'm factoring in for probably the next 2 weeks or so. So we'll see how much we can actually retrace based on the fact that, well, again, for starters, on the quarterly for ES. Remember, we hit my 27% retracement ratio to the penny. On the negative side, it literally hit to the penny. And now we've retraced 25% back up. So that's 50% basically from there down. You've still got about, if you want to retrace back to 50% by the end of the quarter, you've got 2 weeks to do so. And that would be a break back over 4,500. So everything in terms of price, volatility, time, ratios aligns back to the same exact answer. So yeah, I'm just kind of interested to see how else this could work. I haven't played too much. I haven't played around too much with some of the other ratios in here, but I am going to look tonight at some of the, put call ratios just to kind of see where they're currently hitting. Because I think that does matter, because obviously money always matters in terms of flow. These ratios have been super high, especially more recently. Do you guys see this here? Take a look. I've been using 1.5 and higher for really high ratios, because remember back in here, we never really had. So this is some of the differences I'm noticing from February and now from an option standpoint. Do you guys see how we never really had much back in here? Do you see that? So what does this tell you? So even though there's maybe not as much volume in the equity side of things, there's definitely money on the option side. Okay, so you're seeing some flow coming back in there in terms of the ratios here. Yes.
You know what's crazy? There's about $1.3 trillion worth of volume traded in index options and ETF options every day now.
Wow. Yeah, it's insane. And look, you can see it. Like, this is like a great visual of like just how much it's the new market, right? Like, I don't even feel like common stock volume even really matters as much anymore. This is why it's important to start looking at, the alternative ratios. And something that I noticed here, what stands out to you guys here? Like, I just want to know how you guys look at this. Like, when I'll tell you guys what I think, and then you guys tell me what you think. When I'm staring at this chart, I just upped my ratios a bit, by the way. I upped it to 1.75. This is what I see. I see this and some upside, right? And you can actually see that when you went back to test that, you just continued higher. I see this. Do you guys see this?
Yeah, definitely.
So when we actually entered the May ranges, that's when we had a huge put call ratio come in. So this is huge, and this was one of the biggest ones we had since the reversal here. Do you see this here? And when did we have the most recent one? On Tuesday. So I think that these could be some really good leading indications in terms of maybe how you can approach this, right? The higher the ratios get, so look at this. You guys are still paying attention, right? I'm really increasing the ratios. I just want to see the highest ratios possible and which candles are still standing, right? I want to see which ones are still standing. When we last
3 candles standing now.
Yeah, there's barely any, right? Because at this point, this hasn't really happened in history. Like, these are some historic times. Like, if you go all the way back, maybe a little bit further back, but not in the options market. In volatility, yes, not on the call put ratio side. Look at these ranges here. So we're back in here. We hit, what did we hit there? 1.88. Okay, so that was February 14th. 1.86, and we just hit 1.87. Very, very, very close. So 1.86, 1.87, 1.88. 1.88 being the high. And it seems like every time that we've hit these major high ratios, we've had volatility to the downside, volatility to the upside, right? Back down. And right now you're clearly trending right back up. So I think this is going to be a huge factor for tomorrow, especially in terms of OPEX. I'm sure Alex has a lot more that he probably wants to touch on that, but these are just some of the metrics that I'm currently using and looking at that I think are going to be some very big key leading indications for not only tomorrow, but just the continuation on this market trend in general. And I think the market can really catch people by surprise if we trend higher. In terms of how much range we've been testing over the last few weeks, this is not my chart. This is, we'll just fill this for, let's do 6 months. Let's basically do around November till now, right? So basically the periods we've been testing over the last few months here. A good way of approaching this, kind of like what Alex is saying there. So when we went back and tested that range here, right? So when we tested this range in here, we never fully filled the pattern, right? We got stuck at the midpoint. So this means that there was still, let's just write 25%. There was still 25% left for downside risk. You guys with me? That's your downside. It says I am. You might just be on Alex's screen. Really?
Yeah.
Oh, that's weird. What about now?
There you are.
Okay. So I'm just kind of looking at it from a broader view. We've been in these ranges for so long, up until February 24th. That's when we finally busted from those major ranges. So we never fully filled on February 24th, right? There's still 25% left of that pattern to fill from May. When you're kind of looking at this, what I would do here, honestly, is if you take the very top, okay, and then take the bottom of May and measure that, right? So like, let's say, I think the bottom of May, I'm pretty sure is 4055. We'll just go with 4050. And we'll just go with 4800. We're just going to be very, very basic. Half of that is what? Pretty close to 4425, okay? So when I'm looking at this, do you see how that area of 4410 to 4420 is so neutral, right? Whereas when so this is another way of looking at this in terms of an actual measured risk over a longer duration of time. So when we're measuring this based on a yearly basis, essentially snapping 4425, 4420 range is also breaking back over 50% of essentially the year, right? It's kind of like another measured way of looking at this. You've still got a 25% downside move that hasn't happened yet, and it will eventually. If you get this nice big break over this 4425 range, right? You can just assume that, okay, from upside from there. So if you're assuming that from the highs to the lows, we've got a total of 750 points to work with, okay? You filled essentially, so where did we stall when we hit there? I think the lows on ES were around 4,100 or so? I think it was something like that. So yeah, you've basically hit most of the lows in terms of that reversal, right? So maybe 100 points off. In terms of breaking back to that upside from where you're currently trading right here, so you know that's about half. That's about 375 points or so. You could probably assume, for starters, this is just a very simple way of looking at this where you only need 2 or 3 numbers. You could assume that if you were to hit, let's say, a 61.8 ratio, again, all of these numbers are they should align technically slightly over 4,500. 4519 is the major level from September as an FYI, okay? And if you're actually doing a calculated risk, and again, I'm rounding up here, they're not exact numbers. I'm just giving you guys ratios so that you have a really good idea of what to work with, okay? This is an entire year's worth of a move, right? That's kind of when you could potentially start scaling off if we were to have that nice big break to the upside on some of those major breaks. In the event that we were to go back and actually retest all-time highs before June, because I still am pretty certain that June is going to be the big hike. That's my personal analysis. It has been for the last 6 months, and I'm sticking with it. Like, I do think that that would be the bigger hike. We could potentially go back and maybe retest all-time highs. So in the event that we had a bull scenario where we did go back and retest all-time highs, you're going to get around a 550 to basically 600 point move, right? From those bottom lows on those ratios, which again, it's probably pretty close to, I would say 4650 or so. So it'd be like, think about it like this. You've got your lower highs, right? You would take out this high. You would take out this high. You might get stuck right in here, okay? This could be if this was an all-time high retest, this could be an area where it would get very heavy, okay? Because think about it this way. You want to leave about a 25% ratio on each end, okay? Does that make sense? You want about 25% from the highs and 25% from the lows. That should be the kind of threshold that you're working with. And then in the event that you fail that, and we actually do get a real hike, not 0.25 basis points, that would be the kind of steeper move in terms of, retesting 4,000. So that's kind of for those in the room that are more longer term basis, that's kind of my longer term analysis right now from what I'm seeing on here. Obviously, we have to still break that major point, which we haven't yet. We haven't taken out 4417, 4420, so we'll see what happens overnight. But I think if you look at it this way from just a bigger number and just using 3-4 numbers, it'll really help you in understanding overall direction and using all the sentiment indicators that Alex looked at and some of the ones that I looked at in terms of, actual liquidity, because that part matters, right? It does matter how much money is actually flowing into the market, especially in terms of the option side of things. So I'm sure a lot of you are going to be looking up many, many things tonight and looking into more variables and aspects of the market as you should. Hello, everyone. I am a bit congested, so just completely ignore my voice, but which I guess is kind of hard to do if you're watching a video, but okay. So I just wanted to give an update here on my analysis from March 16th and 17th. I obviously had a very bullish outlook. I was looking to see whether we would finally break that 4,520 wall. And we actually ended up getting stuck there for a little bit before breaking right through. And right now, the reason why I'm doing this video is because we've hit my target, or at least we're hitting really close to it. And there could be some major points of I guess heavy resistance over here. So let's take a quick peek, and then we'll check the volatility ranges just to see whether or not things actually played out the way that I thought they would. So for starters, I said that we could definitely, let me just clear all of this out here just so that there's nothing on the chart. Okay, so what I figured is we could potentially maybe retrace back over that month, and we didn't really engulf because we never took out the lows, but we still took out the highs, and this is definitely a huge retracement from the last video. So there we go. Okay, so we've definitely surpassed that now at this point. Typically I always look for I have some weird ratios that I use, but normally I find, like, I know 1.236 is normally the next ratio up. I find that sometimes things kind of get stuck at the midpoint in between that. So for instance, I'd be looking for maybe something like 118 just to kind of, oh, Honestly, I did not even do this yet. I'm doing this right now with you guys in real time, so that's kind of cool that we hit pretty much right near that. So that's really just the ratio between the 100 point and 123.6. I just like thinking that there's usually a variable in between there. So that's where I get these numbers from. If I'm using a 25% ratio, then obviously I'd be looking at 12.5. So we're essentially there. So 4,600 was the really big area in the range that I was looking for, around 4,650 and 4,670 is where it could get really, really, really heavy. And that would essentially be likely the bigger gap to the 123.6, right back up in there around that 4,700. So this is what I was using. This is what I was looking at. When you're looking at the daily, you can see that we've definitely had, wow, this huge reversal up since. Fortunately, I went long before my surgery, so that kind of worked out really well because I didn't really have to do a whole lot other than occasionally manage my position because I wasn't able to day trade for almost a whole week. There was one day where I felt a little okay, so I did catch a trade on ES, but other than that, I really haven't been able to day trade as much the week prior when I was in bed rest. So we've now basically hit these ranges back in here. This was the range in the area that I said that I haven't seen patterns form like this in a long, long time. Like they're quite rare, and they did align with that 4464, 4478 range. This is what we ended up snapping, taking it out completely. You can actually see the week prior on the 18th, which was the Friday before that, we got stuck right at that range. So this was the day after the video. And this is kind of where I was looking to see if we could break. There were some tightening spots around that 4,500. And then we finally snapped it. And you can kind of see we got stuck just below 4,520. 4,520 was that big wall I kept referencing in that video. And you can see there that we did get stuck there for quite a bit. You can see the 3 sessions in a row until we finally got that really nice, clear opening break above. To take us to that 4,600 spot. So currently right now we're back at the ranges right back in here. So I've been looking at mostly January, but honestly, October 22nd, October 27th, and then today we re-entered the range of November 1st. So when you're looking back at SPY or ES or SPX, November 10th was a really nasty downside reversal day. So when looking at SPY, that's kind of the range that we went right back into. I actually didn't take a look at the exact level on ES from that day, but I'm curious to see the lows from that day. 4610, okay. So 4610 and then 4626. So that's interesting. And we've definitely taking out those ranges here. You can kind of see that we are stuck right at that day. We closed, looks like we closed just a little bit below that. So 462650, and we closed at 462550 on that session. Well, at least for that daily candle. Something else I was looking at here is more so intraday. I was looking at the full chart. So I did see this really nice reversal pattern up. There was quite a bit of, I wouldn't really call it specifically chop, but this was uncertainty when it was stuck around the 4540 range to 45224. And you can see it was really trying its best to basically hold above the 4520. Do you guys see that? 4522. 4522, it was just getting stuck right there. So overall trend has been quite bullish. Now would be the time where I would just start to de-risk a little bit on the long side, considering we've hit around pretty close to that 75% ratio that I talked about in last week's video. If we, in the event that we were to see a continued move up, you would be looking at essentially feeling back to the ranges of January back in here. And that's kind of where you can target around 4725 to 30 range is essentially the next upper target. But I would be a little bit cautious at these ranges here. Let's take a quick peek at, no, I guess we could look at the put to call ratio. I never did look at that. This a little high. I've been using like insanely high metrics because I'm really just looking for the volatility metrics. So look at the put to call ratio here. And I don't know if I covered this part in that video because that video was 3 hours long, by the way. It was something I did for my group. I had to really condense it down to the main points that I wanted to share with the public on YouTube, because of course I can't post a 3 hour long video. No one would watch it. You can see the liquidity that came in right back in here. So we've been seeing like insane liquidity on the option side, especially for index options. And this is partially what's contributing to some of these moves. So something I talked about in that video was we've had low volume moves in the past. Like this year was complete low volume all the way up, up, up. Ratios weren't as high, obviously, as they've been more recently, but you can kind of see that there on March 15th. So this was part of my conviction there too on the put to call side. And that's basically what happened in the video, right? Like we just ramped right up and we're starting to hit these really major points right here. So you can kind of see it a little clear on this chart. This is kind of like the ranges. If we were to continue breaking, you'd be looking for the ranges right up in there. For SPY, it'd be around that 473 would be very, very heavy. So take a bit of caution here. Let's take a look at the realized volatility. Okay, so realized volatility. So even with these ratios, I've been using some pretty high ratios on this too. So I've been going with 0.5. By the way, I'm using Tradewell app. This is a great app. I actually know the developer of this. We work together on the trade floor. He is insanely smart, one of the nicest people, super helpful. And honestly, give it a try it out. There's so many different back testing tools. Like I still have a ton to go through, but myself to kind of learn, but it really, really is something that's quite helpful. So this is where I was looking at that ratio there, and it was quite high. So if we up the metrics on here to, let's up it to 5. You can kind of see the stabilization right back down in here, right? So in terms of that, what I was really seeing here was this right here. It really based out kind of like we talked about. And honestly, guys, like I'm super happy with that analysis. Like this played out exactly like I wanted. Actually, let me just take a full screenshot of this so I can show you. This is exactly what we looked at. These upper peaks in here, right in here. This is the realized 21-day volatility. And you can see, I kind of pointed out this little head and shoulders pattern. I mean, it wasn't really the cleanest, but this is kind of what I thought. So we could see realized volatility kind of coming down. And this is exactly how I drew it. So I'm quite pleased with that. And we can see this nice uptick like this. And this is essentially what happened. So I just wanted to give an update on that, and kind of the ranges to watch for here would be right back in here. So far, there hasn't been any triggers on the realized volatility signal yet. So if there is, I will keep you guys posted. But definitely try this out. This is such a great platform for back testing. And that's it. So if you guys have any questions, let me know. Anything in particular in regards to ranges or the volatility metrics or anything like that, just shoot me a message. Make sure you guys like and comment on the YouTube content, because it is something that I'm trying to start doing more of. I know people sometimes find these videos quite helpful, but time crunch is usually the biggest factor for me. But if I get a lot of engagement on there and it becomes something that I can start fitting into my schedule, by all means, I will continue to do so. So thank you for tuning in, and I will see you guys next time.